Real estate versus REITs. This is one of the most commonly asked questions in the world of finance about where should I put my money first? Real estate or REITs? That's the question we're going to be exploring today. It's going to be a great video, so let's finally settle this debate once and for all. Don't know why I just did all that.
Enchanté.
Happy Monday, frugal people. My name is Andrei, Jikh, and let's begin. So when I'm talking about real estate investing, I'm specifically referring to the most common and popular form of it, which is through the residential market. When I'm talking about REITs, I'm specifically referring to publicly traded companies. So if you're new to my channel and you don't know what a REIT is a stock, and it stands for Real Estate Investment Trust. REITs allow you to own property without physically owning any real estate at all. And as a shareholder within a REIT, you're able to collect scheduled income in the form of dividends. So for example, my portfolio right here with Robinhood contains quite a few REITs. And as an investor in these REITs, every single month and every quarter, I get paid income. And that's how it works. So now that you're caught up, let's explore the question on everybody's mind. Which one makes more money? And that's a pretty difficult question to answer because that depends on which time frames we use to compare the two. Watch how interesting this gets. When analyzing the last 145 years of economic data, adjusted for inflation and taking into account not just appreciation, but rental income as well, shows that real estate has had the best historical returns at 7% in comparison to equities and REITs coming in under 6.9%. However, you and I can probably agree that a lot has changed in the last 145 years, right? So is it really fair or accurate to look that far back when comparing the two? Because when looking at more recent data, the research shows that between the years 1977 to the recent present, REITs have actually outperformed real estate anywhere between 4 to 6%, which is huge. So I think you and I can both agree that looking at this question purely from a perspective of money only paints an inaccurate and partial picture. So before you guys comment and tell me, well, I know so many millionaires who have made millions in the real estate market, for every one of those guys, I can show you some guy who bought some penny stock, forgot about it, who became a millionaire overnight. So it kind of cancels out. I would say that we can argue back and forth to an inconclusive answer because we can both find math that supports our findings when it comes to which one makes more money. But if that's the case, what else is there to take a look at then? Well, let's ask and see what some of the experts and gurus in the field of finance have to say about it. For example, two of some of my favorite finance YouTubers, Meet Kevin and Graham Stephan, are both real estate moguls and have made all of their fortune and wealth through real estate. So I'm sure they would recommend real estate over REITs. That same is true for Grant Cardone, who's also made his fortune in real estate. And when I Googled this question to get some insight from Google, I found Dave Ramsey, who suggests real estate, forget about REITs. You know, he's grumpy all the time and he's probably over and sick of what he does. But yeah, I guess when it comes to expert advice, real estate is the winner. But maybe Louis C.K.? Too soon? What do you guys think? I think it's fine. Most people forget to take into consideration 7 important factors when making an accurate comparison, and they are capital, expertise, control, diversification, tax benefits, liquidity, and passiveness. So let's take a look at number 1, capital. I don't know why, but every time I've said the word capital, it makes me feel like the Monopoly man, like, that's the way it was, and that's the way the cookie crumbles. Nobody says capital. You need a lot of money to invest in real estate, right? As much as 20% down. And I know you could put down less, and Meet Kevin has even suggested putting down something like 5% and getting 15% of value out of the property, but doing this is still very difficult to find and requires a lot of money still, because 5% is still $10,000 or $50,000 or higher when we're talking about a property that's several $100,000 to make it worth your time. So not everybody has that kind of money laying around to just invest. But if you do have that kind of capital to invest, then real estate will be far more lucrative and give you far better returns and quicker. So overall though, I would say this category of money is still kind of a draw with the slight advantage to real estate. Expertise. You need a lot more of it to be profitable within real estate, and you need to be operating within your realm of understanding. But Andrei, aren't stocks the same? No, they're not. You don't have to know much to make money in the stock market, which is an odd thing to say, right? Don't you need to be smart to make money? No, because there's something called the VGSLX from Vanguard, and it is an index fund that tracks all of real estate. And all you have to do is contribute every single month to that index fund, and you will average 12% return on your money, which is better than the average real estate investor. But Andrei, Kevin and Graham make so much money with real estate. Don't compare yourself to the expertise of Graham and Kevin and the markets that they operate in and expect to get the same results. You are not them. And also, it helps to know what wedge deals are to take advantage of and really make money in the real estate market. So overall, I would say for this category, it's a hands down easy win for REITs. Number 3, control. Now, I'm kind of a control freak, right? Because
look how long these videos take me to make.
So you can do a lot more with your real estate investment than REITs when it comes to control, because you can increase the value of your investment through your own hard work. For example, you can do so by something called a HELOC loan, which is a home equity line of credit. It's given to you by the banks and secured by the equity that you built inside your home. And banks love this because they give you money which you can use to improve the value of their asset, and if you don't pay them back, they get to keep their house. But anyway, the point still stands. You can use more money to increase the value of your investment. And the other form of control is self-control, which isn't talked about very much. But imagine this scenario: when the stock market crashes, when the real estate market crashes, what do, right? You panic. So what is much easier to sell? Well, what's easier to sell is the thing that just lives inside your phone. It's this REIT. It's like this useless digital thing that exists on your computer, and it's just increasing up and down in value and decreasing, and you get scared because you cannot live inside of your REIT. When your house value drops in half, let's say, you could still collect rent, or you could just live inside the house because it's a physical thing that you can touch and smell, and I don't know why you'd smell it, but it has some intrinsic value in it, right? And that is a lot easier to have some self-control, and it's a lot harder to do something silly and stupid with your investment, whereas it's a lot easier to just sell your REIT and end up losing money. So when it comes to control, real estate wins over REITs hands down. When it comes to diversification, REITs are far more diversified than any piece of real estate I could own. And that's because with just one REIT, I could own commercial property, which is not something I could ever afford as a single real estate investor. That's because the next time I go to the mall, I'll see something like maybe Disney, and I'll remember that I have way too many plushie toys and I don't need more. And Disney is probably paying rent money to the REIT for renting out the space. That means that as a REIT investor, my clients are of the highest of quality. That means no background checks, no credit reports, no history checks, no late night phone calls about broken bathrooms. I don't have to worry about any of that. That's peasant work, and I don't want to work for anyone. So REITs win hands down for this one. But when it comes to tax write-offs, easily real estate wins this one. That's because we can write off depreciation, mortgage interest, repairs, maintenance, property taxes, the list goes on. The only advantage REITs have here is if they're invested in a tax advantaged account like a traditional IRA. Otherwise, real estate wins hands down. When it comes to liquidity though, neither will give you liquids. It's a draw. Invest in water. It's the next gold rush. Just kidding. So liquidity is the ability to turn an asset into cash, and REITs win this one easily. And that's because it can take months to sell off real estate in comparison to REITs, which take just the click of a button. In seconds, you got rid of your REIT and turned it into cold, hard digital cash. When it comes to true passive income investing, you just can't beat REITs. I don't have to deal with bad tenants, the fixer-uppers, finding the good deals. That takes up so much of your time and a peace of mind that yes, real estate can be passive if you're willing to sacrifice some of your income by hiring a property manager, but overall, I think you and I can both agree in saying that REIT investing is far more of a passive investment, so REITs win on this one. And number 8, smashing that like button. I know you think it has nothing to do with REITs or real estate, but it has everything to do with REITs and real estate, because if you don't smash that like button, I will not live inside of real estate or REITs. I will be outside with no real estate or REITs. Thank you. So which one is better, dude? Well, what do you mean better? Do you mean just pure make more money with? If that's the case and you have money, experience, and time, and you're willing to put in the stress and the headache and all the things that go along with it, then I would say you will make more money with real estate because your money is leveraged 1 to 5. And even if we argue about the total percentage returns are better for REITs, guess what? You can still make more money with real estate because your money is leveraged in that case. So again, the barrier of entry to playing the real estate game is far higher, but if you're willing to meet all the qualifications, I would say real estate is better. However, if you have less money up front, or you just want something that is almost 100% passive that pays you money while you sleep like a baby and not worry about it, or you guys don't have the expertise or the knowledge to go out and find those wedge deals, or you like to take your money in and out of markets quick, or do you guys get the idea? The theme here is that REITs are far more flexible. Or if you're like me, you want to avoid debt. And yes, I realize there's good debt and there's bad debt, but coming from someone who saw his parents as a kid struggle to make ends meet because of debt, it can be something that is very detrimental regardless of whether it's good debt or bad debt. And I know that not everyone will agree with me here, but I've always felt like when I owe money to somebody, my entire life at that point for some reason just feels forced. Like every time I wake up, I feel like I have to go to work because I owe somebody money. And if I don't do it, then I'm gonna be in debt and I'm gonna be in big trouble. So no matter what I do, I feel like everything is not for the right reasons. I just wanna be able to do things because I love to, not because I have to. And I know that's a personal hang up that I'll have to get over, but maybe you can relate with me. That's why REITs are still an incredible way to diversify your real estate portfolio. It's a great way to still make money that still rivals that of real estate investing. As your net worth grows, you should diversify from real estate into REITs or vice versa, just to round out your portfolio. But I started with REITs and they haven't let me down so far. Every single month, I collect consistent monthly paychecks. I get paid while I sleep, which is pretty cool because I feel like I have employees and the smartest Wall Street CEOs working for me to collect my monthly rent, which feels really nice, and I really can't put a price tag on that. I don't know how, but I know it's valuable. The rest I will leave up to you to decide. REITs or real estate. That's it, guys. Love you all. I'm gonna have to go see It Part 2 and conquer my childhood fears, and I'll see you guys very soon. Bye-bye.